Well, I am never speechless, but this morning I'm about as close as I could possibly get. But I've prepared some stuff anyway. In fact, there's so much I don't know how we can ever get through it. And I could have gone on for hours, but I didn't. So you can thank me for that. There is no other way to describe the combination of 1010 followed by the Optimus video and then followed by yesterday's earnings call. They add up to a phenomenal and game-changing situation. The new book that Elon calls it, the new book has been opened and it's a thriller. It portends a future that will be amazing for us to take part in, which is what Elon is his main goal is he's looking for this exciting future so that we can get up in the morning and be thrilled and looking forward to what's going to happen today and tomorrow and next year and 10 years from now. Well, the stock market is currently showing that it likes the future potential of Tesla. And while it's fallen off a little bit from its high, it was at 251 was the high for this morning, down around 247 last time I looked. I think uh, one can one can you can't sniff at the fact that we've had the 13-14% gain overnight, and the potential multi-trillion-dollar valuation should power the stock to 300 shortly, I think, not investment advice. And the all-time high is now, just requiring a few more proofs. Okay. We've got the plan now. We've got the laid out, detailed, finally. Thank you so much, Elon. The detailed plan. We've got it. The path is laid. Now they're going to need some more proofs before, some folks will get involved. To get to the all-time high, there's going to need to be some proofs. 2 days ago, I admitted to feeling that the prospects for the street paying for the real evaluation during the next 90 days was probably meager. But Elon spelled it out yesterday in no uncertain terms, and it'll take a bit of time, for this to really sink in for the and really for some of the ridiculous misunderstandings to be cleared up. Because some of the articles I read last night were like, "Are you kidding me? Did they listen to the same, the same earnings call that I did?" Anyway, but I believe this will happen. The clarity will come, the proofs will be there, the receipts will be provided, and we'll see the stock move to 300 and then to all-time highs. There was and is one piece of the pie that was left very unclear, and for some reason, that is the part that the street cares the most about. And that is the affordable, so-called affordable vehicle. It's no longer being characterized as a $25,000 vehicle, maybe a $29,950 vehicle after the $7,500 IRA discount. It'll be produced on the 3Y lines. And I suspect it will share some aspects of those vehicles, but it can't be too good because you don't want it to completely start to cannibalize the 3 and the Y business. But I believe that the lack of clarity on this part of the presentation yesterday, because everything else was like, here it is, crystal clear, crystal clear, clear, crystal clear. The part that was left very unclear was this new affordable vehicle, but we'll see. We'll see what happens here in just a few, actually weeks at this point. We're only, how many weeks are we from 12? These are 13 minus 2, minus 10 weeks from the end of the year. Think about that. Anyway, here is a couple of examples of how the call was received immediately after it ended. This is from Business Insider, and then we'll also have a few that were from this morning. So starting out, Gene Munster, a managing partner. We know about Gene Munster. He's always talking about Tesla. He's at Deepwater Asset Management. He told Business Insider in an interview that the call was kind of a rare quarter compared to the last 6 quarters where there was good news across the board. And the stock increase just shows how much the analysts are focusing on the near term and Tesla's automotive business, which is nuts. Elon talking about autonomy, cybercabs, robotaxi fleets, he said, but the analysts care about cars and profitability. And we've heard this story so many times. Tesla said that Cybertruck was profitable less than a year after its release. The company also said in its earnings report that production on more affordable models remains on track for the first half of 2025. But how did he miss the fact? How did he not say the Cybertruck is now the only profitable EV pickup? There's only one profitable EV pickup, and the Tesla, Elon pointed out, Tesla is the only BEV maker in the world who is profitable at all, even counting BYD, whose BED, whose battery electric vehicle BYD's BEV division is not profitable. It makes its money from the other division. Musk also touted this is continuing with the article, Musk also touted other aspects of Tesla's business, including its energy products and fully autonomous self-driving cars. Mark Narayan at RBC Capital said in a note following the earnings call that the quarterly results should largely erase the losses Tesla faced after the robotaxi event, meaning that the robotaxi event, people went, oh, that wasn't good enough, and this now will make up for that, more than make up for it. I said before the robotaxi event that there was no chance that the robotaxi event could meet everybody's expectations on every single subject across the board. But that earnings call yesterday basically answered every single question. I mean, really across the board. Oh, sure, I could come up with a few more questions, but it really knocked it out of the park. So why wouldn't the stock go to 300 when that's what I was predicting would happen before the 10/10 event if we got those questions answered? He goes on to say, if analysts are happy with the fundamentals of the car business, perhaps they can turn their attention to longer-term ambitions like autonomy, FSD robotaxi, and Optimus, he said. Then this morning from MarketWatch, Piper Sandler's Alexander Potter thought things turned out better on Tesla's Wednesday afternoon earnings call. Tesla disclosed more information than usual. No kidding. Particularly regarding the 2025 outlook, while reiterating plans for the new vehicle in the first half of 2025. That's what everybody talks about. Elon Musk predicted 20 to 30% delivery growth in 2025, thanks partially to this new product. Even if his outlook proves optimistic, there's room for upside versus our current expectation of plus 8%. So they're only thinking it's going to go up 8% next year. That's just us. I think we'll be able to prove over the next couple of days. I've got some great guys. I got Lutz coming on here in a minute. Jeff will be on midday, 11:30, something like that. We'll put that one up. And then tomorrow I got AJ coming back, and AJ and I are going to talk about the fourth quarter. And then I'm going to talk about over the weekend, I'm going to talk about next year. The numbers are going to change radically. I think you're going to be shocked. So admittedly, there's still information that Potter wants, including how self-driving software contributes to Tesla's financials. But he said that's mere nitpicking. Well, there's plenty of people that have provided lots of information about that, including Elon. It's hard to be anything but optimistic following this earnings call, Potter wrote while reiterating an overweight rating. William Blair's Jed Dorsheimer saw numerous signs of financial progress. The energy business posted record margins, and automotive gross margins, exclusive of credits, turned higher. The 17.1 automotive gross margin performance beat the consensus view. It beat anybody's view. There was nobody, zero, not one soul predicting 17.1 for automotive. This was supported by achieving the lowest cost of goods sold per vehicle to date of $35,106, and Cybertruck production turning gross margin profit positive after a year, only in less than a year since it began deliveries. We expect Tesla will be able to hold margins at or above the 15% floor without further material deterioration. Now, there's something to look at. Yeah, I think that it's very unlikely they'll fall back below 15% again. But there's a whole bunch of reasons that go into that. It's so complex. No time this morning for that. The streets got these additional responses this morning. Canaccord's George Gianarikas, I don't know how to pronounce his name. Margins were good, quite good, much better than expected, and a standout for the quarter. He boosted his Tesla stock price target by $24 to $278 per share. The quarter was truly solid overall. Most of this strength, as we have written, comes from Tesla zigging and traditional auto manufacturing zagged. Okay. CFRA analyst Garrett Nelson was slightly more cautious. He still lifted his Tesla stock price target, however, by $5 to $225 per share. Well, that's in the rearview mirror. Following last night's impressive earnings report, in our view, expectations were low heading into the release after 4 consecutive bottom line misses and a robotaxi day that left investors with more questions than answers. The key question is sustainability of Tesla's Q3 gross margin, not only sustainable going up, maybe not in the fourth quarter, maybe right around the same in the fourth quarter, and then going up. That view, curiously, was shared by Tesla's own finance chief, Vaibhav Taneja, who said that sustaining these margins in Q4 will be challenging given the current economic environment. And we'll talk about that a lot over the next few days. Note that we are focused on the cost per vehicle, and there are numerous work streams within the company to squeeze out cost without compromising on customer experience. Taneja added. I guess I need to learn how to pronounce his name. Other price target changes, including Bank of America analyst John Murphy, who took his estimate $10 higher to $265 a share. We're almost there, as well as Goldman Sachs analyst Mark Delaney, who added $20 to take his estimate to $250 a share. We're basically there. Wedbush analyst Dan Ives, who carries an outperform rating and a $300 price target on Tesla stock, said the improved margin figures were clearly an indication that Musk and company are continuing to focus on profitability while balancing his plans for the future. Okay, this is Randy Kirk. Hit like, subscribe, and notify. And as I mentioned, you got a great shows coming up. I'll just leave it at that because we got so much to cover. I'll talk about it at the end again. All right. In the week ending October 19th, the advanced figure for seasonally adjusted initial claims of unemployment was 227,000 compared to the 242,000 expected, and a decrease from the previous week's revised level. The previous week's level was revised up by 1,000 to 241, and the 4-week moving average was 238, an increase of just 2,000. The previous week's average was revised up by 250. All right, and then the total number of continued weeks claimed for benefits in all programs was 1,621,000, a decrease of 16,000 from the previous week. So strong jobs number. Well, in other words, unemployment numbers being less means job strength. Okay. So then we go to this. The October flash U.S. Purchasing Managers Index, PMI survey, signaled a further solid rise in business activity to mark a robust start to the fourth quarter. Growth was driven solely by the service sector, and that's 60% roughly of the economy, as manufacturing, about 20% of the economy, contracted by third month running. The other 20%, by the way, is government and, what else? I forget. Capital? Anyway, it's roughly that. That's roughly the breakdown. However, 20% for government. That would make sense. However, as manufacturing output contracted for a third month running, meanwhile, unemployment fell slightly for a third consecutive month amid uncertainty ahead of the presidential election. Said confidence, this is the future, in the outlook over the coming year, meanwhile recovered after a sharp decline in September as companies anticipated greater stability and certainty post-election. Okay, so the October survey also recorded slower rates of inflation for input costs, but not eliminating, it doesn't say it eliminated, slower rates of inflation and input costs, and also for prices charged, with the latter falling especially sharply to the lowest since May of 2020. That's good news. Output and demand. The headline S&P Global Flash U.S. PMI Composite Output Index registered 54.3 in October, up from 54. So that's a little tiny increase. To signal a sustained, solid, does this sound like somebody trying to push an agenda? Anyway, to signal a sustained solid expansion of business activity at the start of the fourth quarter. The latest reading was only marginally below the average recorded over the last 6 months, marginally below the average of the last 6 months, which had witnessed a sustained period of steady, robust growth, all in the services sector over that period. The services sector rose at the sharpest rate for over 17 months. It had the best month. By sector, growth remained uneven in October, characterized by strong service and falling manufacturing output. Service sector activity grew at a marginally increased pace at the start of the fourth quarter. How many times do they need to say this? The inventories of finished goods consequently rose because manufacturing was declining, and apparently they kept the machines on. Inventories of finished goods consequently rose 4 months in a row. Now, sometimes you're going to be increasing inventories going into Christmas, so this could be part of it. Maybe it doesn't say it's whether it's seasonally adjusted. Future sentiment, looking further ahead. Having slumped to a 23-month low in September, optimism about output in the coming year rebounded sharply in October, hitting a 29-month high. So that's a big shift in 1 month. It could be the Trump election potential is, I mean, it's all everywhere. I'm for Trump, but take my personal opinion out of it. Headline after headline, the money, what do you want to call it? The U.S. dollar index this morning. The headline on that was the people believing that Trump's going to win is starting to impact what people are willing to pay for the dollar. The shift in sentiment underscores the unusual volatility of the current business and political environment as the presidential election nears. The boost to confidence in October was often a reflection of hopes that paused spending and deferred decisions ahead of election will lift once the political situation is clarified, so that things will become clearer as far as what's going to happen in the future. Prospects of lower inflation, lower interest rates, and a stronger economic growth in 2025 also helped instill greater confidence. Future optimism struck a 16-month high in the service sector and a 9-month high in manufacturing. Okay, and then employment this is still the PMI report. Employment fell for the third straight month in October, though the decline was again very modest and less than reported in August and September. The drop in payrolls was more pronounced in manufacturing. Again, same thing over and over. All right, now breaking news. Sales of new single-family houses in September were at a seasonally adjusted rate of 738,000, according to estimates released by the Census Bureau. This 4.1% above the revised August rate of 709 and 6.3% above same month last year. And the median sales price of new homes sold in September was $426. The average sales price, so that was the median, and the average was $501,000. And both of those are, of course, increases. Yeah, that's right. Absolutely true. All right, so we've got the economy apparently maybe okay. I know I've said that it's been a recession since June, but maybe June and July are going to turn out that they were much less GDP improvement than was originally stated. I think we're going to get those numbers here in a week or two. But maybe not. Maybe I was wrong. It happens. All right. So where is Tesla with all of this news, with the bonds being super strong? They're a little off last time I checked this morning, but still strong. When I say strong, the yields are strong, not the bonds themselves. The bonds, of course, go in the opposite direction. So where are we right now? We've got Tesla up $35.27 to $248.92. As I mentioned, it was at $251 for the high of the morning. I'm guessing we end the day above $251. That would be my guess. And who knows what that number will be, but I could imagine it going back to that 262 number, maybe even 265. That seems to be kind of a break point, but that would be, a lot to do in a single day. But $35 You would take that, right? In one day, the Dow is down 93 right now. The NASDAQ is up 77. S&P is up 9. Now, the NASDAQ is up largely on Tesla because Apple's down, Google's down, Amazon up a bit, Meta up a bit, Microsoft and NVIDIA down. So mixed in the Magnificent Seven. And then the Cathie Woods are all up this morning. The Cathie Woods are very predictable right now. The bond yields are down a tad, and the Cathie Woods have been beaten down, so they're going to be up a bit on even the slight good news that bonds are down just a tiny bit. All right, let's look at the percentages. The Dow is down 0.21%. NASDAQ is up 0.48. S&P up 0.19, and Tesla's up 16.64. It's not often that you get a day when your stock goes up 16, almost 17%, and I think it's going to end even higher than that. All right, so what about those bonds? Let's go and take a look. What we've got right now is the 10-year. Let me just make sure that this is going to stay there because sometimes it changes. Okay, this is correct. 1.6 down, 1.6 basis points down so far today, but we're still talking about 4.226. This is not a number that I'm not happy. The 2-year is up down 2.4 basis points to 4.062. The 3-month down about the same as 2.6. The 2-month down 1.6. So for once, they're all kind of going in the same direction. That's an unusual situation of late. All right, let's go ahead and take a look at oil. We have got oil up marginally, 9 cents for Texas, 15 cents for Brent. You've got, we're sitting at just almost 71, $70.85 for Texas, $75.07 for Brent. Natural gas up 4.23%. Wow, that's a big jump at 2.441. Gold ticks higher, ticks higher. Okay. Well, we're a little bit off of all-time highs, sitting at 27.41, but up 12 for the morning. It was up more earlier in the pre-market. Silver up 0.20% at 33.895. That is also right against the recent high. Needs to get to 38 to be all-time high. Copper at 4.34, up 0.07 this morning. The dollar is, as I say, here's the headline. Dollar stands tall on bets for slower Fed cuts and potential Trump win. See, that's what I'm telling you. These headlines like this are everywhere. The market is starting to bet that Trump is going to win. So right now the dollar is up against the euro 0.18%, down against the yen 0.39%. Bitcoin up 1329, back up to the 67,568 range. And that is the end of my reporting on those markets. Back to Tesla, who continues right about where it's been. The 250 mark seems to be it's not a technical level. It's not some barrier that we've seen before, but right now it is bouncing against that 250 level. Okay, you are going to want to come back. What is it? It's, you're going to be looking at this somewhere after 8 o'clock California time. So somewhere around 11 o'clock California time, Jeff Lutz and I are going to really dig in. Okay, this is going to be one of the better analyses that you're going to hear from anywhere because it's going to combine two guys who have actual manufacturing experience at a major level. And we are going to dig into it, and you're not going to hear this anywhere else. This is going to be incomparable to anything you're going to hear on any other YouTube channel because none of the other guys have any manufacturing experience. It's just a fact. Okay. Jeff and I do. All right. And then after that, of course, tonight you're going to have it's a Bradford Ferguson tonight. And I'm quite confident that Bradford will have plenty to say about yesterday's call and should be interesting on another level, a different approach, a different look. And I think you could look forward to that as well. Then tomorrow around noon, we'll get AJ, and AJ is going to have to, explain himself. He had a big miss. He said he thought it would come what do you call it? The total per share profit would come in at 50 cents, and of course came in at 72. But we'll talk about the reasons why. I think I know, but I'm going to be very interested to hear what AJ thinks, why he thinks he had such a big miss. But he wasn't alone. Everybody missed. Every single, across the board, the average was 58, and nobody was really above 60. So 72, yeah, everybody missed. I didn't play. I am contemplating playing again because I think, based on some things that I'll be talking about over the next 48 hours and into the weekend, some of the things I'm going to be talking about, I might have been high this time and I might have been the winner. Who knows? That's speculation. All right. So, as always, it's been great talking to you.